A fair value gap is a 3-candle pattern in which there is no overlap between the high of the first candle and the low of the third candle. In this case, we have a fair value gap. But then when there is an overlap in between the high of the first candle and the low of the third candle, then we don't have a fair value gap. Now, how do we use fair value gap? Whenever price leaves a fair value gap behind, it always retraces back into this level of inefficiency in the market before it continues in its intended direction. Now, there's a case whereby price is going to disrespect a fair value gap. When price disrespects a fair value gap, we have a fair value gap inversion. Now that we have a fair value gap inversion, price is always going to retrace into this fair value gap inversion before it continue moving in the opposite direction this time around. Fair value gaps act as support to push price up in the case of a bullish fair value gap, and it acts as resistance to push price down in the case of a bearish fair value gap.